Bitcoin halving and in-depth exploration. Introduction. Bitcoin halving is a term that is fundamental to the understanding of the cryptocurrency's economic model. It's an event firmly embedded into the code of Bitcoin that ensures its scarcity and has profound implications on its monetary policy. This article dives deep into the concept of Bitcoin halving, exploring its origins, mechanisms, effects, and significance. What is Bitcoin? At its core, Bitcoin is a decentralized digital currency, operating without a central authority or single administrator. It's a peer-to-peer system where transactions occur directly between users, without intermediaries. These transactions are verified by network nodes through cryptography, recorded on a public ledger called a blockchain. Origins of Bitcoin halving. The concept of halving was introduced by Bitcoin's pseudonymous creator, Satoshi Nakamoto, as a way to control inflation and ensure a deflationary environment. It's a mechanism that ensures that only 21 million Bitcoins will ever exist. How Bitcoin halving works. Every 210,000 blocks, or approximately every 4 years, the reward for mining a new block is halved. Originally, the reward was 50 Bitcoins per block. This means 2009 to 2012, 50 BTC per block. 2012 to 2016, 25 BTC per block. 2016 to 2020, 12.5 BTC per block. 2020 to 2024, 6.25 BTC per block, and so on, until the reward becomes negligible and the maximum supply of 21 million Bitcoins is reached. Effects of halving on miners. A. Reduced rewards. As the name suggests, miners receive half the Bitcoins for validating and adding a new block to the blockchain. B. Mining profitability. As rewards decrease, miners need to assess the cost-effectiveness of their operations, especially when considering electricity costs and equipment wear and tear. C. Potential miner exodus. If mining becomes unprofitable, some miners may exit, leading to a temporary decrease in network security. However, the Bitcoin protocol adjusts the mining difficulty accordingly to ensure block times remain consistent. Implications for the Bitcoin ecosystem. A. Inflation rate. Halving decreases the rate at which new Bitcoins are introduced into circulation, acting as a counter-inflationary measure. B. Price implications. Historically, halvings have been followed by significant price surges due to decreased supply and increased demand. C. Market sentiment. Halvings usually generate significant media attention, influencing both existing and potential new investors. Past halvings and market responses. A. 2012. Approximately a year post-halving, Bitcoin reached an all-time high, surpassing $1,000 in late 2013. B. 2016. Bitcoin's price surged again, reaching nearly $20,000 by the end of 2017. C. 2020. The months following this halving saw Bitcoin shatter previous records, ultimately reaching around $64,000 in April 2021. Historical context. A reflection on traditional finance. Bitcoin's halving mechanism stands in stark contrast to traditional financial systems. Central banks control fiat currency supply, often printing more money in response to economic downturns, which can lead to inflation. Bitcoin's predetermined scarcity, emphasized by the halving event, positions it as digital gold, drawing comparisons with the precious metal known for its inflation-resistant properties. Miner adaptability. Survival of the fittest. With each halving, miners are forced to adapt. They either need to find more cost-effective methods to mine or rely on transaction fees to sustain their operations. Over time, as block rewards diminish, transaction fees will play a more prominent role in incentivizing miners. This adaptive environment ensures that only the most efficient miners, using the latest technology and methods, continue to maintain the network's security. Broader impacts. Cryptocurrency adoption and public perception. Bitcoin halvings invariably draw attention from mainstream media, leading to increased public awareness and discussions about cryptocurrency. While the immediate focus tends to be on price predictions, the long-term benefit of these events is broader public education about the principles behind Bitcoin and the philosophy of decentralized finance. A glimpse into the future, post-final halving. A question looming large on the minds of crypto enthusiasts is, what happens after the final Bitcoin halving, when all 21 million Bitcoins have been mined? The belief is that by then, transaction fees will be the primary incentive for miners, ensuring the network's continuity. Furthermore, if Bitcoin's adoption continues to grow, its inherent scarcity might make it an even more sought-after asset. Diversified reactions, market players and their roles. While retail investors often get swayed by the allure of potential price surges post-halving, institutional players have a more measured approach. Their involvement, backed by in-depth research and long-term strategies, brings an added layer of legitimacy and stability to the Bitcoin market, cushioning against extreme volatility. By diving deeper into the effects and significance of Bitcoin halving, one realizes its multifaceted impacts on the world of finance, technology, and society at large. Future predictions and speculations. While historical data indicates price surges post-halving, it's essential to note that correlation doesn't imply causation. Other market factors, macroeconomic conditions, regulatory changes, and technological advancements also play crucial roles. Conclusion: Bitcoin halving is more than just a protocol adjustment, it's an event that showcases the cryptocurrency's deflationary nature. While its direct implications on price remain speculative, the halving undeniably plays a central role in Bitcoin's economic model, emphasizing its scarcity and potential long-term value. This article provides a foundational understanding of Bitcoin halving, but, as always, potential investors should conduct their research and consult with financial professionals before making decisions based on halving predictions or any other market factors. Experts remain optimistic as Bitcoin approaches crucial milestone. On August 9, renowned cryptocurrency analyst Michael Van de Poppy's views spurred confidence among cryptocurrency specialists as Bitcoin, BTC, approaches a possible breakthrough. The crypto world is buzzing with anticipation of a huge event. With Bitcoin's value hovering around the $29,800 mark, Van de Poppy's evaluation has pointed to a crucial juncture that shows Bitcoin is on the point of a huge improvement corresponding to a celebratory occasion. The focus lies on Bitcoin's attempt to regain the psychological milestone of $30,000. Van de Poppy's outlook radiates positivity, underscoring that the edge for a bullish upswing is ready simply above the $29,800 resistance level. This transition might represent a shift from resistance to strong guidance, probably propelling Bitcoin into a more favorable trajectory. Bitcoin's recent trajectory has been marked by a decline from its peak of $31,818 on July 13. This downward movement passed inside the confines of a descending parallel channel, reaching a low factor of $28,585 on August 1. Despite this reduction, the $28,800 horizontal help degree remained steady, as shown by repeated inspections and the appearance of lengthened lower wicks, an obvious sign of increased purchasing desire. Bitcoin rose by more than 2% over the past 24 hours. The likelihood of authorizing an exchange-traded fund, ETF, for the Bitcoin spot is debatable, which is largely to blame for this rise in costs. Bitcoin's resilience is especially obtrusive in its adherence to an especially tight trading range, spanning from $29,000 to $30,000. This prolonged period of consolidation displays the winning sentiment in the cryptocurrency realm, where regulatory clarity, especially within the U.S., is deemed important. The looming prospect of regulatory clarification may serve as a catalyst for a bullish leap forward beyond the coveted $30,000 threshold. At the heart of regulatory considerations lies the Securities and Exchange Commission, SEC, which presently holds sway over a couple of applications for a Bitcoin spot ETF. Consistently influential figures in the cryptocurrency sphere have publicly speculated on the SEC's eventual approval of those endeavors. Michael Novogratz, the mastermind behind crypto investment powerhouse Galaxy Digital, expects the launch of a Bitcoin ETF within the next 4 to 6 months. This statement, based on insider insights, feeds into the developing expectations of an institutional capital influx upon ETF approval. The race for the inaugural ETF approval is extreme, with contenders vying to capture market enthusiasm from the outset. It's broadly believed that the SEC's approval might not be singular. Instead, a couple of approvals may be granted concurrently. Cathie Wood, the visionary CEO of ARK Fund Management, shares this view, suggesting that the SEC's choice could embody more than one Bitcoin ETF. On August 13, Wood's ARK21 Stocks ETF is technically on track for regulatory approval. However, analysts widely count on an extension of this approval date, aligning with the broader anticipation surrounding the SEC's deliberations. In the end, Bitcoin scene is buzzing with anticipation as the cryptocurrency teeters close to a potentially transformative milestone. Enterprise professionals and regulators alike are intently looking, and the upcoming ETF choices may bring in a new era of institutional involvement and market dynamics. Conclusion: the proximity of Bitcoin to a possible breakthrough, as emphasized by Michael Van de Poppy's views, has sparked confidence among crypto specialists. Bitcoin's resiliency, regulatory prospects, and anticipation of ETF approvals all contribute to its upward trajectory. The Bitcoin ecosystem is buzzing with expectation, as institutional engagement is expected to increase with ETF selections.